Hello, hello, hello. Nick Shaheen here looking at Workhorse. I think the last video I did was April 12th, and it was prophetic, unfortunately, for the bulls. This was the day I did it. So I'm going to show you, um, I'm going to share with you the concept then. So the video before that was during, just after this. So I thought, I made the comment that if I'm long, that's not where I panic because of this base that they built way back then. So they spiked, and then they spent a couple of months consolidating. They got out. They successfully tested it for footing, and then they got out, and then they went to God knows where, and then I thought that there would be opportunities, and there were huge opportunities on bounces, 50%, 60% rallies. And if somebody didn't book, then they don't know charts, or they're just too greedy. Because when you get here, and that's exactly where you failed the time before, and you stay long after a nice rally, then you have unrealistic expectations. This is where solid traders will get out. Understand investment, etc., but when a stock just dropped 50%, you take what you get. And so then the message was from the video on the 12th of April, right here. I said, if they lose this candle, GTFO, bug out. That's the stop loss, because that was a game changer. In fact, let me show you. I just took a snapshot from the video. There was my candle hovering at, and the name of the video was "One Line Matters a Lot." That was the name of the video. So I know at least 1,000 of you out there saw it, and the comments, there was a good debate in the comments at the time. So guess what? They lost it, and my point then is I don't want to find out where they go. I didn't want to tell people how low they could go, but I said I don't know. Technically I know, but I don't want to freak people out. But as a trader, when they go into the unknown, I just bug out and buy it lower. At the time, this gap was not filled. Now it has, and now there's this tiny gap here that is not filled, and it could get filled, and it's at around 6. So it's not a reason to continue down to 6, but it's there. So will they see it? Will they target it? I have no idea. And the management recently had reason to tell us some good news or some hope, but instead they had kind of a downer statement overall, at least on the face of it, and what I read. So they didn't propagate a good message. They kind of like lowered the expectations and maybe delayed some dates and stuff. So in the absence of actual results, because they are still working on building a good business, their words is all the bulls have. And when they don't deliver those words, then the bulls are really out of ammunition. I mean, anybody that just keeps adding to their mistake, to their loss, is just doing it out of hope and faith in something that is not concrete. Versus, I'll give you the example. This is nothing against the management or the company. It's just decision-making process. So if I'm long Palantir and it got cut in half, I can go out and say, look at the P&L. They just delivered growth 75 and 80% year over year. They have a run rate of 1 point something billion. So I have concrete evidence to say, here's why I'm long and here's why I'm doubling down on the dips. I can't do it here because I don't have that. I have just faith. And with faith, I don't mind it. I just need to know that I classify it as a speculation trade. It's not an insult. It's just that I think I'm right. This is my opinion, but I cannot back it up with any facts. So that makes it speculation by definition. And when I do that, I better not make it a giant portion of my portfolio, and I better not add to my risk on down days, because when the company is not proven, there is no bottom. So sometimes good companies don't catch fire on Wall Street. So for some reason, maybe they don't want to buy the stock, even though it's golden in your opinion. So I wouldn't fight it. All right. So if somebody wants to get long here, it is not an obvious mistake. So that's not my message. It's not an obvious mistake. It was an obvious mistake here, and up here and up here, those were like asking for trouble. Anytime you're chasing, you're asking for trouble. When you're trying to catch a falling knife, it could be a mistake if it continues falling, but it's not an obvious mistake. So I'm okay with somebody trying long here. Like anybody that thought they wish they owned it here, they should be thinking about it here, right? All right, so what else did I do in my video last time? I said, I'd hate to go there, but Ride, okay? I think they own a part of it. So at the time, Ride, I forgot where it was, but I said it could be going to 9 or 8 if they, and Ride at the time was already, let's see, 412. They were already worse off right here. They had already triggered this little last ditch effort, and I said, I don't want to find out what happens once they go below there. And I said, in fact, I think they're already in trouble, and it could go down to 9 and 8. So it's well below 8. So I don't know what happened with Ride and what's going to happen at the earnings, but back to the stock at hand. So the decision is whether I want to get long now or not whether I want to add or not. I should not want to add, because whatever money somebody risked, they risked it on a speculative bet, and they should accept whatever is coming without making their problem worse. I mean, we don't know anything today newer, better than what we knew yesterday or the day before yesterday or last week. So in fact, we knew something a little bit worse, so why would we want to add? That's my thesis. So I don't want to discourage anybody from chasing their dreams, but I just want to put a dose of reality. Can it go lower than 6, than 7? It can, and that's the point. We don't know where the bottom is. And here's the other thing that we never think about, and that's probably the most important thing, and I should have led with. Whatever stock I'm trading, regardless of how great of an opportunity, even Palantir or Apple or Facebook, they have to trade within the collective of the whole market, correct? So you think that the market, oh, it's already corrected so much. Has it? Let me show you a chart. That is the S&P. Is this a crash? It's one red tick on a weekly basis. One red tick. Yeah. So this, if the market does this, just corrects 10%, what do you think will happen to all the stocks within it? They will all be dragged down with it. What if the market corrects 20%? What do you think will happen to all the good stocks, let alone the frothy stocks, the stocks that don't have a P&L to support them? Everything will fall. Nothing is going to rally alone. Even the beloved banks and the oil stocks, and they will all fall together. So we forget that. We forget that Workhorse has to trade within the collective. And for that matter alone, I should be somewhat cautious from that perspective, because the market could cause this one to drop through no fault of its own, this one. So be realistic with the expectations, then you can avoid a lot of mistakes. So can I do something about it? Yes, I can use the options markets to mitigate my risk. I don't want to do a full lesson on it, but I'll give you a taste. All right, so if I loved the stock, if I decided to buy the stock today at 7.7, instead of doing that today, I could have used options to get paid to go along the stock at 6 or even 5. How does that work? Okay, I'll give you an example. This is a December contract. It has 220 days on the clock. If instead of buying 1,000 shares today, I say to somebody, I'll buy your shares at 5 or 6. Let's pick 5 for round numbers. I'll say, I'll buy your shares at 5. And they'll say, great, can you guarantee it for me? Sure. How can I guarantee it? I'll go out and I'll sell this put. This is not a recommendation to do anything, because this is just an education piece. I would never sell a naked put. This is called a naked put, unless I want to own the shares. And that's the purpose. Instead of, that's super important, buying the shares at 7.7 and spending $1,000, 1,000 shares times 7.7 with no margin for error, I would collect $1,000 to promise to buy them at 5. What? Yes. Money goes into my account for me to be long the stock. But you say you're using puts. I'm selling them. I'm not buying them. So if I sell it, I collect $1,000, and then I'm on the hook for buying them at 5. I don't have a choice. The person that bought them from me has the right to stick me with 1,000 shares at any point in time. It could be today, it could be tomorrow, it could be a month from now, it could be 218 days from now. They have until the expiration date of that, and then until 5:30 that night to give me the shares or not. So I could wake up one day owning 1,000 shares at $5. So $5,000 will disappear from my account. Instead, I will have the 1,000 shares, and I will keep the $1,000 that I collected today. So that's really important point, because my break-even point is 4. So compare that to somebody who bought the shares today, rode them all the way down from 7.7 to 4. So now they're down a schmut ton of money, and I haven't even started losing money. I broke even at 4. So the people that scare you out of using options really are not giving you the whole story. They can be more dangerous, but this is one example where they're safer. And nothing is safe, but they're safer. So somebody that bought the shares is liable for losses starting the minute they buy them. My losses as a sold put are paper losses that don't get realized, and the minute they assign me the shares, then that loss disappears off the book, and then it starts a new clock with the fresh grand is still in my pocket. My pocket now, it's mine, and I have the shares in hand. So selling puts is one way to mitigate risk versus buying calls. People like to buy calls. I don't. I prefer selling stuff, and if you want to buy calls, you just pay a little less than outlay out of pocket to buy the shares. But at a $7 stock, I don't favor that. I don't like that as much. It works, but it's just not for me. All right, back to the stock of Workhorse. I can't convince you not to do it because it is something that somebody has interest in, and they have a thesis, long-term, whatever. Just know that it should come with medium conviction at best, because it's really less than medium conviction, because if I buy shares, I'm putting all my hope and faith into the hands of people I don't even know. I feel like I know these people on the board and in the management team, but think about all the companies you worked for. Would you trust anybody in those companies with your money? Well, that's what's going on here. I mean, just reduce it down to something as silly as that. All right, good luck to you, and hopefully that helps people out. Oh, wait, before I go, there are a couple of candles to look for immediate information. So tomorrow, for example, what is today? Shoot, 5/12. 1 month ago. Wow. Okay, so anything below this candle right here, which was 5/11 yesterday, 7.2, so let's call it 7.1, I would bug out because I don't know what's below. It could be 6, it could be 4, it could be 2. I don't know. It could be a minute down and then it comes back. I don't know. Same thing I said at the level where I said bug out, this level. I said, I don't want to know what's below this one. And guess what? Turns out there's a lot below it, and it's not done. So I don't know. This is another version of it. Smaller line in the sand, but vacuum down here. And the machines are selling the pops. Any pop towards 10 will get me out as a profit. Or if it pops to 10 or even, maybe to 13, God willing, if that gets me out of trouble from my position, I would take it. So whenever I have a trade that goes sour, I have to redefine it. I would say this is a hostile trade. My goal is to get out with minimal damage. So if I come back to even, I go, great, I'm back to even, let's go. No, I'm back to even, thank you, Lord, I'm out. Whew, I dodged the bullet here. That's what I would do, personally, personal preference. And people are different. Thanks, signing out.